Hey everybody, welcome back to the Tech Intersect podcast. I'm your host, Dr. Tanya Evans, and today we are diving into the fascinating world of decentralized finance, also known as DeFi, and blockchain innovation. Joining us is an incredibly distinguished guest, Evgeny Lyandres, the renowned professor of finance and the head of Blockchain Research Institute at Tel Aviv University. With an impressive background of academia and as the founder of VirtuSwap, Evgeny brings a wealth of knowledge and insights into the evolving landscape of Web3 and decentralized exchanges. So I'm excited for a number of reasons to have this conversation. We will talk about all of that in a moment. But first, Evgeny, welcome.
Thank you very much for having me. It's great to be here.
Excellent. Well, the professor in me honors the professor in you, particularly those who work at this intersection. You know, we are a small but mighty tribe, and we continue to expand. But I don't, in fact, let me ask you this before we dive into the questions. What year did you get into the space? When did you have your rabbit hole experience?
So I think my introduction to blockchain and to DeFi was slightly different than for most people. So I actually started by doing research in blockchain, and only then kind of starting to dive into the kind of practical elements of it. I wrote my first papers on ICOs in about 2017-18. They were popular back then. And then later on, DeFi summer appeared in the summer of 2020. And that's basically when I heavily got into DeFi. I was kind of experimenting with it a bit before, but I started kind of trying to educate myself more, and also to to see what problems remain unsolved there, and what problems could be solved both from the kind of academic standpoint and also eventually the practical standpoint. And I guess we'll be talking more about that today.
Absolutely. It sounds a bit like my journey as well. In 2017, the fall of 2017, I was reading an academic paper at the intersection of decentralized protocols. I didn't exactly know what that meant at the time, and the intersection of that and my area of expertise, which is intellectual property. And so I was fascinated about that. I wasn't sure about the magic internet money at the time. But, it's kind of like 2 weeks of asking questions, going to YouTube University, listening to every podcast I could at the time. There are far more now than there were then. And kind of coming out of my room 2 weeks later, probably in the same pajamas, saying, oh my God, this technology is going to change the world. And then kind of looking under the hood to see what is this first use case of this time-stamped secure ability to decentralize data storage and provide transparency and access. All of that was wildly interesting. And then I fell down kind of the crypto asset rabbit hole, in some sense thinking about NFTs and all of those things. So I think this will be a really helpful discussion, particularly for those academics who are sometimes reticent and kind of sitting on the sidelines. It's tremendously difficult as a lawyer. It's like you put law together with academia, and help me, we are still in the 20th century. But something happened to you to kind of move you forward in terms of your background and journey. You have a PhD in finance, and now you are a leading voice in blockchain research and education. So talk about the intersection of that for you.
Yeah. So this is a great question. So I think there's a lot of connection actually between finance and blockchain, and the reason is that smart contracts, right? That's something that's driving this technology in the last few years. I think the introduction of Ethereum was probably an even bigger step than the introduction of Bitcoin in that sense. Finance is the most natural place for smart contracts, right? Because finance is actually very simple, right? It's very easy to define all the ifs and thens, right? There is a limited number of states of the world, and once you define all those, that basically defines your smart contract. And I think that's the reason for why the main probably applications of blockchain technology that are currently operating are in finance, right? So, people were talking about a lot of different things, about digital identities, about, supply chains. All of that exists, but at a smaller scale. I think the reason is that those are more difficult things, with more contingencies, with more states of the world, and, finance is just easy. And so in that way, I think, the fact that the biggest application of blockchain right now is to finance, meant for me that this is a natural place to be.
Yeah, that
you
makes
know.
sense for sure. When you think about the first use case in the financial realm and how a global technology also has such a fundamental impact on something that has traditionally been the purview of government, in terms of the issuance of money, when you think of monetary policy, both within a nation, but also how it's interconnected through a series of central banks and the impact and the import, then that makes sense to me, not only having your more formal and traditional education, but moving into the entrepreneurial ventures, ways to find innovative uses to make things better, faster, less expensive, more accessible. So, talk about in that light the founding of VirtuSwap.
Yeah. So I guess, we're talking about a big, I mean, you mentioned this. There's a big problem that kind of the existing financial markets,
Hmm.
they're, partially government run, but, more importantly, I think they're very inefficient, right? So if you think about kind of the amount of money that is wasted on financial services, I mean, it's huge. It's about 8% of GDP in
Mm.
developed countries, right? Even if we can save, half of it, right, by making things more efficient, and it's possible to make some of those things more efficient using blockchain and DeFi, right? Will be creating a lot of value to the world, right? And so, talking about kind of more directly about VirtuSwap or decentralized exchanges as part of the
Mm.
financial landscape. So decentralized exchanges, right? Are there to solve a problem of trading in centralized exchanges, right? That have several issues, right? So there have been several papers documenting, for example, there is a lot of wash or fake trading on
Hmm.
centralized exchanges, right? I actually have a paper like that myself, but many other people as well. That basically means that, when you trade on centralized exchanges, you don't really know at which price you're going to trade, right? Because the order book that you see might not be the correct one, right? There is another problem that's pretty big that, as a small trader, you trade against typically people who are more informed, right? So you're
Right.
bound to lose on average, right? And so, the technology that employed in most of kind of decentralized exchanges in DeFi, it's based on what's called automated market making, right? And the basic idea is that there is, a liquidity pool, right? That, someone or some people, put money into, right? And
Hmm.
this money is used in order to enable trades, right? And, the trades are defined according to some formula, to some algorithm, right? Nobody has an advantage over anybody else, right? The market making itself is completely automated, right? So the market maker,
Hmm.
person who put the money, doesn't really have a say, with whom to trade and which prices, right? Everything is defined, ex ante. And so that basically, means that the playing field is level for everybody. Everything is in the open, right? What people call on-chain, right? And that means that it's impossible to fake trades, to wash trade, right? It's just a much more fair system for trading, right? So that's
Hmm.
basically the starting point, right? And I think kind of the promise in this technology is huge, right? And maybe we'll touch upon this later on, but once we have sufficient regulation, right? That's kind of your area of expertise, but once we have
Hmm.
sufficient regulation to allow trading of real world assets in DeFi, I think that's where the explosion of this market is going to come, right? And that's when kind of this market is going to grow, hundredfold relative to what it is right now, right?
Hmm.
So, so that was the starting point, right? And then, as I was trying to kind of to learn and to research more and more about how this market operates, it became quite, evident that one of the biggest problems in this market is liquidity, right? So,
Hmm.
first of all, there is insufficient liquidity, and liquidity is very fragmented, right? So there is a lot of crypto assets. There is quite a lot of liquidity in the very top ones, right? So if you want to trade, Ether against USDC, you're totally fine.
Right.
However, once you go outside of the top few assets, top five or top seven, the liquidity dries up, right? And that
Mm.
basically means that your trades become more expensive. The price impact of your trades become large, right? And this is a big problem, right? And this problem is inherently very difficult to solve because the assets are many, right? The liquidity is limited, right? So what do we do to make kind of trading kind of cheaper, such that its cost can be compared to the cost in centralized exchanges, if not
Yeah.
better than it. And so that's kind of was the starting point, right? Myself and my co-founder, we started to think about what are the ways to kind of make liquidity work over time, right? To
Mm,
make kind of more efficient, right? To make trades, cheaper than they are right now, right? And so that's basically how the idea behind VirtuSwap, came about, right? So VirtuSwap basically is a way to to make the most efficient use of liquidity, which is especially useful for kind of what we call longer tail assets, right? And really
hmm.
any assets outside of top 5 or 7 on a given chain. Right. Happy to dive into how the technology actually works, but that's kind of the big picture.
Absolutely. Before we look under the hood, we have to know where's this car taking us. And so I think that you set the stage very well about the problem that you were focused on in order to kind of fill the void there. And it's not insignificant. It's one thing to talk about engaging in the exchange of information. It's quite something when those packets of information transfer value and level the playing field, open up markets, not just where you are, but around the world. Really, really fascinating. And I think so few people, particularly here in the United States, talk through the benefits of that. There's far more nice to have than need to have. Although my argument is it's a need to have everywhere. But when you have kind of the folks who began at the fringes, who had money to lose and to have this in addition to, I think the point of the value of open pools, that open markets and liquidity mean it even more when you think of the underlying point of Bitcoin as kind of being the people's money and the people with a capital P for the world view. And then you take that a step further with remittances and then also just the exchange of assets within the crypto ecosystem so you don't have to go in and out. My book is called Digital Money Demystified. And it talks about going from cash to crypto. And then, so it's kind of onboarding. Obviously, there might be offboarding, but I imagine a wonderful world where we stay within the ecosystem, not going on and off. I think stable coins have a great deal to do with that. But things are only as good in terms of value as your ability to exchange them freely in markets. And so the ability to have DeFi to open that up is critically important. Obviously, their challenge, we've talked about kind of the power and the promise, and we'll get to some of those, back to those things in a moment. But talking about the challenges in DeFi, over these last couple of years in particular, the Sam Bankman Frieds and Three Arrows Capital didn't do any favors for our industry. When I think about the regulatory morass in the United States and our alphabet soup on the Hill, and I think of Gensler being in charge of the SEC and all of those things. It's an episode or 10 for another day. But my point here is when you're thinking about some of those challenges that you've already mentioned regarding liquidity and engagement, I guess even of a community, I also think of some of the issues of hacks and exposure to coding issues. Sometimes it's not a hack, sometimes it's a failure. And so how you navigated that, because that is an ever-present reality anytime we're engaged in software code.
Yeah. So this is a great question. So of course, security is of paramount importance, for any protocol that you're writing, on the blockchain, especially DeFi protocol that deals with money, and
Hmm.
if it's not done right, people can lose a lot. So that's for sure. So we take great care of trying to make our particular protocol as secure as possible. Usually through people do it through audits, and we've
Yeah.
done many of those, right? Security audits of the code. It doesn't, eliminate, a chance that something might happen, but it, hopefully reduces this chance
Hmm.
significantly, mitigates the risks, right? I think the biggest problem, right? So you asked, what are the biggest problems of adoption of DeFi, right?
Mm.
And I think the biggest problem is and the fact that there is no customer service, right? If you
Absolutely
if
none.
you
I've learned that the hard way. I'm
right?
telling you what I know.
Myself as well. So yeah, I think most people did, right?
Most, yeah.
But most people who are actually in it, but most people who are not, not in crypto, not in DeFi, right, are probably afraid to start this journey because of this, right? Because it's just so, the experience is so inferior relative to what we're used to in Web 2, right? That for a lot of people it's a big deterrent.
Yes.
So that's one, and the second one, right? Is that basically, all of DeFi right now, all of the potentially superior technologies that are deployed there are only applicable to crypto assets, right? And
Mm,
as you mentioned in the beginning, a lot of people are skeptical, right? I hear a lot when I go and present my academic work in different
yeah.
seminars, right? People are not really connecting, right? And so there is a very small fraction of academic finance profession who really thinks that this is a big innovation that's going to change the world. I think it's going to take time. It's going to take a lot of education, and it's going to take a lot of improvements in the ecosystem, right? So fewer hacks, more secure code, better user experience, maybe some customer service at some point.
At some point. And it's
Right.
interesting because this is a really important point because we are so used to that. And I'm a Gen Xer. I don't love being on the phone, but I love talking to a quote unquote real person when I want to get something done ASAPidly. So it was even a fundamental shift for me to lean into what it means, this idea of self sovereignty, the idea of sovereign financial independence, of being a part of a larger goal of freedom. And that is a fundamental shift. That is something that does not happen nearly as fast as the technology that might enable it. But this is the entire point, right? I don't know that it necessarily replaces or not. I don't know if I'll be on the earth when that happens, but I do know that now the legacy system has a customer service issue, even if DeFi doesn't have the best customer service. The customer service is us. We are the ones we've been waiting for. We don't trust
Right,
ourselves,
right.
nor should we sometimes, but this is how it's facilitating, it's ushering in this new area where we reimagine our relationship to value and kind of center ourselves in that as opposed to being outside relying on intermediaries. I'm interested in your thoughts on this. There are some wonderful intermediaries, and sometimes when we disintermediate in one space, new intermediaries creep up to meet the moment. My problem has always been rent seeking. My problem has always been what you talked about earlier in terms of the the extraction of value without the requisite input of value. So I'm just that wasn't kind of on the radar, but since we're talking about it now, interested in your thoughts about that.
Yeah, yeah, yeah. No, so I agree that financial intermediation, is useful sometimes, right? So it
Mm,
connects, buyers to sellers, it connects, firms to investors, it connects, lenders to borrowers. It is important, right? It's a question of cost.
mm,
There needs to be financial intermediation. We can think of DeFi also as part of financial intermediation, which may be more efficient, right?
mm,
Maybe less risk, rent seeking, just because there are fewer people in the middle,
yeah.
and that I guess is the reason why I think eventually DeFi will win. It
Hmm.
might take a lot of time, as you mentioned, but it's just a very fertile ground for financial innovation. It's much easier to do financial innovation in DeFi than in kind of traditional centralized finance, right? It's you can basically stand on the shoulder of giants and just
Mm,
expand on because everything is open source, it's in the open, right? You can basically just expand on things that are already there, right, and not invent everything from scratch. So the pace
hmm.
of innovation is much faster. So I think there is. In my eyes, there is no question as to whether DeFi is going to be kind of a big component of financial system, right? I think the big question is when.
Right. Talk to us now about um, what you would have the new, maybe not new to crypto, but new to decentralized finance. It's one thing to hold, to buy, to hodl, whatever. It's another thing to then unlock the extended value or the additional value. I don't have the proper terminology to say what other access points to innovative uses of finance or being your own bank? How does the person who has some crypto then unlock the power of DeFi generally, and in particular through VirtuSwap?
Yeah. So DeFi allows for much more sophisticated investment strategies or any financial strategies than traditional finance. Right? Like you said, in traditional finance, right, you can just basically choose your investment portfolio, right, and and hold it or maybe trade sometimes, but that's about it, right?
Mm,
In DeFi, there are many more things you can do. So you can, for example, provide liquidity, to allow trading by other people, right? So basically become a market maker. You can
right.
become a bank, right? You can lend your money to other people, right? Which is possible, but much more difficult to do in traditional kind of finance, just because there is again a big rent that the banks take, in the process, right, of connecting lenders and borrowers. You can basically stake your funds, right, to secure protocols, to secure blockchains, right? So there are just a lot of things you can do with your money in DeFi that you cannot in traditional markets. Now, in terms of what VirtuSwap brings to the table in that regard, is basically sort of the second part of our innovation. So we can basically divide what we do into broad two parts. The first one is
Hmm.
financial innovation, right? So we have this kind of protocol that allows to kind of bring liquidity to the trade whenever it's needed, right? We can maybe kind of dive a little bit deeper into how that works,
Hmm.
but that's kind of where we started with. That's the financial innovation, right? That's trying to ensure there is more liquidity in longer tail assets than there seems to be.
Mm,
The second one, right, is basically trying to make kind of this liquidity work over time, right? And what that means is, from the perspective of liquidity providers, right,
mm,
trying to ensure that liquidity providers' money goes into places where it can, earn the biggest yield possible, right? The biggest
right.
returns, right? And that we do by basically, building different kind of AI models. Now it's called, in this particular industry, it's called AI agents. We started
Mm.
actually doing this 2 years ago before the term existed. But the idea basically is, well, let's say that we have, whatever, $10,000, right? And we want to put it somewhere, right?
Hmm.
For example, in VirtuSwap, right? Let us kind of run simulations, right? Let us try to predict, what trades are going to happen, right? Which pools are going to generate the
Mm.
most fees for the liquidity providers, incorporate the impermanent loss, all the kind of possible risks that are part of the strategy, right? And let's basically come up with an answer, right? You put $3,000 into this pool and $2,000 in that pool, right? And that is going to basically kind of maximize your risk return trade-off, right? As a liquidity provider, right?
Right.
So we solve this problem, right now, within VirtuSwap, right? Assuming that you are a liquidity provider to VirtuSwap, right? Where basically you should put your money. In addition, kind of an adjacent problem that we also
Mm.
solve is we want to incentivize you to put the money into places where we want the money to be, right? Where we
Mm.
think the trades are. And so we also have the system that we call Minerva, which is basically, system of allocating rewards to different pools to incentivize certain behaviors by liquidity providers, right?
Hmm.
And the objective here is twofold, right? First, to allow most efficient trading, right? To reduce the average cost of trade, to the extent possible, and
Hmm.
at the same time to increase to the extent possible the returns to liquidity providers, right? And so this is kind of and this. There are synergies, right? So, when the returns to LPs, liquidity provider are larger, they're
Hmm.
coming to the protocol. That means there's more liquidity, there's fewer, less price impact, cheaper traders come and so forth. So
Hmm.
it's sort of, we want to unleash this kind of, this self-enforcing kind of mechanism of growing the protocol by improving the conditions for both LPs and traders.
So what you're talking about here are the essential incentives, which I think people don't also fully appreciate. That is part and parcel with the technology. That the technology in and of itself is important. It's even essential, but it's not sufficient without of those market incentives. Can you just put a fine point on that? Because I don't think people talk about that enough in kind of layperson's terms, because that is something that people, they kind of see the market, but don't understand how integral incentives are to how decentralized protocols function.
Yeah. It's a great question. So, as an economist, right, I think incentives is probably the most important word in economics, right? So, people
Mm,
respond to incentives, not just in DeFi, everywhere, and in DeFi in particular. So, if you think about, and I'll give an example of liquidity provision because it's kind of the most relevant to what we do. But if you think about liquidity provision, right, the trade-off that you're facing is the following. On one hand, you're going to receive some fees, right, from trades that
mm,
people perform. On the other hand, you're going to lose to the arbitrageurs, right? So people basically who exploit kind of differences in prices, in the pool into which you provide liquidity and external prices, outside of
right.
the pool, right? So that is what's called, impermanent loss. That's kind of the most commonly used description of that kind of risk. So sometimes, most times, the returns to liquidity provision are actually insufficient to
Hmm.
cover for the impermanent loss, right? And so then the liquidity providers need to receive something else, right? And what they receive is the incentives of the protocol, right? So most protocol basically give incentives in the form of the protocol's token. Right, so
Hmm.
VirtuSwap is not an exception. It has its own token, VRSW. We give incentives in VRSW. There is an algorithmic emission of those tokens. Every week there is about 1 million token or so being emitted, and it's given to liquidity providers in different pools, right? So we control kind of through this AI-based system, we control the distribution of these emissions, to different
Hmm.
pools, right? But the total is given, right? And the reason in general, those tokens have value, right, is that basically they allow you to do something within a protocol, right? So for example, allow for cheaper trading, right? In our
Hmm.
case, if you hold and stake our tokens, you get a bigger share of the rewards that we give, right? So basically that creates incentives to buy the token, right? And it's supposed to support the price, right?
Right.
So
And are these ERC-20s? I forgot to ask which.
yes,
Okay, go ahead.
yes, yeah. So we're operating on Polygon and Arbitrum, which
Uh,
are layer twos to Ethereum, and yes, so the token exists on three chains. It was minted on Ethereum mainnet, and then
hmm.
bridged to Polygon to Arbitrum.
Okay. Um,
Yeah.
uh,
So
Go
sorry,
ahead. Mhm.
no, go ahead.
No, and I interrupted your final point, but I think your point is made with respect to the ways that you specifically incentivize, and you have the token for additional benefits, the reduction of fees, et cetera, and also the benefits for staking the token as well. That kind of leads into just what we think about in terms of the future of finance and blockchain. Where you are is leaps and bounds from where you were in 2017, 2018. I don't even think it's hyperbolic to say that the world will change more in the next 2 years than in the previous 10. And I think that will continue. So, in terms, I know this kind of like this fuzzy amorphous type of question, but in terms of the future, you are an innovator and you are a founder. So in addition to where you are today, I imagine that you're all innovating forward as well. So talk about just the future of finance and continuous integration of blockchain technologies and cryptographically secured assets in a Web3 economy.
Yeah. So I think that there are kind of two directions in which this market is going to evolve. The first one is just pure innovation, right? Technological innovation and financial innovation, right? And
Hmm.
that's what we've been seeing over the last 4 years at least. In DeFi, probably a little bit more, and we're going to continue to see this, right? But that by itself, I think, is not enough because if you asked me what the TV, if you asked me in 2021, what the TVL, right, the overall amount of liquidity in DeFi would be at the
Hmm.
end of 2024, right, I would give you a different number from what we're seeing right now.
Same.
Yeah, so it's basically, we actually haven't moved forward in the last 3 years in terms of kind of the adoption of this market, right?
Right.
If we did, it was not by much. So I think kind of the probably even the more important kind of direction of going forward is kind of making the connection between this market and traditional financial markets
Yes.
stronger, right? Right now, it doesn't really exist, right? So there is some connection through centralized exchanges or through some onboarding, offboarding places, but that's about it, right? And we mentioned this a few minutes ago. I think once we can do tokenization of real world assets, right?
Mm-hmm.
Whether it's equities or bonds or real estate, anything else, right? And there are a few ventures that are trying to do this right now.
Mm-hmm.
At this point, with limited success, from my standpoint, it's probably mostly because of kind of lack of coherent regulation,
Correct.
on the subject. And so once this problem is solved, right, and I'm sure it is going to be solved, then there are some steps that are being taken. There is this, Mika in Europe. There are a
Oh
few
yeah.
places where we're progressing, slowly, towards that goal. But once we're able to trade stocks in DeFi, I think again, so this is going to be the moment the thing is going to explode.
Mm-hmm.
So I'm really looking forward to that. By that time, I think kind of financial innovation is going to be even more impressive than it is right now. But even if we stop, with innovation here where we are, right, and
True.
just allow kind of more assets to be used in this system, right, that's going to be huge.
I agree. And I also agree that because, putting my professorial hat back on as we begin to close out, how you encourage students and innovators in the space. I mean, but before I really was, all in, kind of 10 toes down in the space, I didn't know what it would mean for me personally, but I had a professional responsibility to usher in the next wave of lawyers to be conversant in this space and to really show up for innovators, for legislators, for policymakers in the space. And then I kind of came along afterwards. I know that, and we talked a bit about it earlier from an academic point of view, it's not just our colleagues who we are influencing or not, but even more importantly, and the real excitement for me, our students. So any final thoughts for innovators, particularly those who are also students of economics or in other areas whom you influence to learn, to lean in, and to move forward?
Yeah. So it's actually, as I was kind of changing slightly my research focus and, the focus of what I do every day,
Yes.
from finance proper to some sort of intersection between finance and blockchain, also, changed my kind of teaching portfolio as well. So I used to be teaching kind of traditional finance classes, corporate
Yeah.
finance, this sort. Right now, I'm teaching almost exclusively blockchain and DeFi related classes. My favorite one is actually one that I'm developing right now. It's called DeFi Lab, where basically students kind of we do some theory, but we also kind of practice a lot of things that can be done in DeFi, and there's no replacement to practice, and people seem to like that. So I think what students are really excited about is that blockchain and DeFi in particular removes many of the constraints that we're accustomed to in our traditional lives and traditional
Yeah.
financial markets as well, right? You can do so much more with just by just writing code, right? You don't need to to get some permissions or some legal
Mm.
paperwork, right? You one good example is arbitrage, right? So it's very difficult to do arbitrage in traditional markets, and usually just big banks, big financial institutions, do this. Small investors don't. In
Mm.
DeFi, right? As long as kind of you're able to identify arbitrage opportunities better than others, right? You can just write your code and be the one who are
Mm.
making the financial markets better and getting richer as a byproduct of that.
Nothing wrong with that, right?
Right. So I think it's just a place that's kind of that's right for people who like to innovate, right?
Hmm.
Because it's much easier to innovate in the space.
I've been talking a lot about it being a skilled professional, and I think that's what you are kind of leaning into, and it's something that I encourage not just our new students, but those who want to reskill, to upskill, and kind of reimagine. I'm mid-career, reimagine what a career could look like. You could not have convinced me, 7, 8 years ago, and certainly not before, that this is where I would be. But here we are, Evgeny. Before we get out of here, first of all, thank you so much for joining me. But also, any final words that you want to share about VirtuSwap, anything coming up, and how folks can get in touch with you or learn more about you and your work?
So we are kind of continuing to build. Anybody who's interested can go to virtueswap.io, and there's also a link to the trading app, to the actual website where everything happens, right? Where we
Mm.
implement all these ideas. We obviously have social media presence, right? You can we have our Twitter account, right? We have our Medium where we where we publish kind of more in detail, kind of semi-scientific articles.
Yeah.
Uh, there are also, obviously we have Discord and Telegram, right? So all of those places are easy to find by just kind of typing, VirtuSwap in the search box. And I also have my kind of personal, kind of more academic presence. So if you're interested in academic research on DeFi and blockchain, I'm easy to find. Just type my name in Google.
We're too easy to find.
Right.
But I'm going to share those links in the show notes as well. Evgeny, your insights today have been incredibly enlightening. I appreciate your energy and kind of the light that you shed on this topic and your perspective. It's clear that the intersection of finance and technology and blockchain and education is foundational for the way that we continue to engage in our respective disciplines. But just thank you for sharing your expertise and for all the work that you're doing. We are making a difference. And if it's just our small but mighty tribe, I think this is a great way. So you are now certainly a family member to the Tech Intersect podcast. And when I go back to my blockchain, crypto, and law course, I teach that every year. I'm going to be calling you, sir. So I hope you will,
Oh,
answer the call and talk to my students as well.
definitely. It will be my pleasure. And thank you very much for having me. I think it was a great conversation. Really
Excellent.
had a lot of fun.
Thank you. Thank you, everyone, for joining us on this episode of Tech Intersect. And be sure to follow this, your favorite podcast, and check out the website for more updates. You can also find the FinTech Law, the Advantage Evans FinTech Law learning channel on YouTube for insights and updates. Please stay curious and keep exploring. Thank you.